What Sam did was generated $14 to $16 billion worth of Solana, FTT serum. And then he went shopping for a bank to give him a loan. But he didn't want, you wouldn't get a loan from Goldman Sachs on it. No one's going to borrow you money, at least no non-crypto company. So what he did was he went to himself. He runs a bank called FTX. He applied for a loan from himself. He granted himself the loan.
Michael Saylor sat down with Patrick Bet-David on Valuetainment to explain the FTX scam that cost people billions. He describes how Sam Bankman-Fried turned FTX into his own personal exchange, regulator, and issuer in order to extract funds illegally. Don't forget to like and subscribe, and I hope you enjoy the video.
Did the guys in the industry like yourself, the heavyweights, were you aware that something was going on at SBF or no?
Yeah, I mean, I think that you have the Bitcoin community opposite the crypto community, and there's been a low-grade, sort of boiling guerrilla war between the two camps for the past 2.5 years. And Sam is kind of like the poster child of the crypto world. Right? Sam makes billions of dollars on an unregulated exchange offshore. He makes billions of dollars issuing his own air token. He spends hundreds of millions of dollars giving to the crypto lobby and to politicians. And one of their messages is, Bitcoin is bad for the environment. It uses too much electricity, but not to fear. We have a staked air token, which does the same thing as Bitcoin, and it's environmentally friendly. So, the Bitcoin community would say, there's something ethically broken about being able to issue your own unregistered security, right? They call it committing the sin of shitcoinery.
Yep.
Right?
Yep.
So Sam and most of the people in the crypto world were always guilty of the sin of shitcoinery, or pumping and promoting unregistered securities. And that was obvious. The phrase that pops up over and over again is the vast majority of all crypto tokens are unregistered securities. But I think the diabolical twist in the FTX story that none of us saw coming, but it is particularly diabolical, is so Sam creates, $8 billion worth of air token with SRM and FTT. Then he issues himself locked token, secret locked token, marks it up on his balance sheet by another $4 to $8 billion and calls it $16 billion worth of collateral. Okay. Then he goes shopping for a bank to give him a loan against this. Well, if I took $1 billion of Apple stock and I went to a legit bank, Bank of America, JP Morgan, Goldman Sachs, I say I got $1 billion of Apple stock, they would say, well, we will give you collateral value for up to the amount you have, or 5% of the daily trading liquidity on a legitimate regulated exchange. So if you show me a security that trades $1 billion a day and you have $1 billion of it, I might give you $50 million of collateral value. And that means you could borrow $25 million against it at 50% loan to value, but I'm going to margin call you if it moves a tick. So it means, practically speaking, $1 billion of that legit security is probably going to give you $10 million worth of a loan.
On $1 billion.
On $1 billion.
That's 1%.
Okay, right? Because the gating factor is, what's 5% of the trading liquidity of that token or that asset? Because if I have to dump that thing in the market, I want to sell the entire position without moving the price.
Sure.
Okay, so that's the traditional world onshore. So what he did was he went to himself. He runs a bank called FTX. He applied for a loan from himself. He granted himself the loan.
Applied for a loan from himself.
Well,
right?
secretly applied. He didn't tell anybody, but when they say, well, Alameda had a margin account and the margin position was slightly bigger than I thought, what he means is, oh yeah, they pledged a few $1 billion of air token, gave themselves a $10 billion loan, and they extracted, even if he had pledged $15 billion worth of air token, giving yourself a $10 billion loan means that you gave yourself about 100x the collateral value you would have got on a regulated exchange onshore. So what he did was, in essence, extract $10 billion of real stuff, dollars, Bitcoin, saleable assets, and he pledged $10 billion worth of air token stuff. And of course, it's a double diabolical thing. Here's the problem. So I create a token I have 300 million tokens, and then I basically trade it with myself. Like I give it to you, and you work for me, and you give it back to me. Then I lean on it, so I lever it up 10 to 1. You know, on FTX, you could lever it 20 to 1. Then I borrow your money, you're a depositor, so I take your money, you have $10 million, I lever it up 20 to 1, I have $200 million, I buy my own token, I drive my token up by $5, $5 times 300 million makes me 1.5 billion in collateral. I post the collateral, and then I withdraw $1 billion of, 100,000 people's money. I put it in Alameda, and then Alameda gives a $3.5 billion loan to Sam, right? He gave $3.3 billion to either himself or his personal family holding company. So here's the diabolical twist. I didn't just generate $10 billion of an unregistered security to dump it on the unsuspecting retail. That would take me 500 trading days, dumping 20 million a day, right? He didn't do that. What he did is he generated $10 billion in unregistered security and then just borrowed $10 billion secretly from his depositors and then went and gambled it, traded it, spent it, lost it.
How?
And that is it's particularly impressive. The VC investors put $2 billion into an offshore exchange. The exchange, just to be clear, was unethical and illegal from the very beginning. It's illegal to do what they did in the U.S., and it's unethical if you think I am front-running my customers, issuing a token, manipulating the price of the token, dumping it on them.
If you did that in stocks, you're going to jail if you front-run.
It's absolutely illegal.
Yeah.
Right? FTX was its own regulator, its own market maker, its own exchange, the issuer, right? All at the same time. This is such a and the hedge fund. Too much conflict of interest. He was actually trying to buy BlockFi and buy Voyager with FTX equity, which of course is fraudulent and worth nothing. But if I borrowed $1 billion from a company and they want the money back, and I can simply give them $1 billion of equity, take over the company, and not pay the loan back, I can roll the entire fraud forward. FTX said, we're built by traders for traders, and Sam bragged that they only charge like 3 basis points trading fee, and he was 30 times cheaper than Coinbase or much cheaper than Binance. So he's stealing customers off of the other crypto exchanges by, in essence, offering near free trading. He's not trying to make money off the trading. He's trying to actually get the assets on his platform, because once he had the assets on his platform, he basically used FTX like his own personal piggy bank. It's like there's $10 billion there. Everybody else is going to get wiped out if their margin positions trade down 20% for a minute, except Alameda. Alameda has God mode. They never get margin called. So in an exchange, in the U.S., it's illegal to go more than 50% loan to value. That means you're kind of like, you start with $1 million, you borrow 500,000, you're 1.5x levered. Okay, well, FTX started with 100x leverage, and then they backed it down to the responsible 20x leverage, which means that you post $1 million and you can take a $20 million
insane. Okay. Who allows that?
Now, here's the insane. What if I put $1 billion of air token, FTT, on the exchange? I recognize you, and I let you take a $10 billion bet. Like, whatever. You took a $10 billion bet. Now you withdraw $4 billion of real cash, and you use that to buy property and buy everything under the sun. He just, he lured them with the promise of cheap trading, high leverage. And, if you thought, well, Sam is manipulating the price of FTT and Serum and Solana, and he was, right? That's illegal and unethical, right? It's a pump and dump scheme. We talked about this before. But if you accept the idea that crypto tokens that are issued by some offshore, dude are okay, then you're thinking, well, I guess I want to go buy some of that and get behind Sam and Alameda because they're going to drive the price up. And I think Solana went from, $3 to, what did it go to, 50? It went way up, and FTT went to $50 a token or something. So you could have made a lot of money trading those tokens, but you probably would have wanted to go to the FTX exchange because, guess what? Newsflash, it's illegal in the U.S.